Hello, everyone, and welcome back to the J22 Report. I am your host, Johnnie Market. You all know that drill. Smash that like button, subscribe if you already haven't. Just a little disclaimer, nothing should be construed as financial investment advice. These are just my opinions, thoughts on the markets and what's going on. Let's get into my stories recently, and as you know, my primary investment for now is gold. That's where my most of my money's invested in. It's not really, so I'm going to talk about it. So, what brought my big news up, actually, before I share, is that one thing I was looking over, it's that time of the year, it's earnings season or that time of the quarter. And I was looking at all these companies. I'm also doing stuff, my new kid, with custodial accounts and everything, getting her trained up. 3 months old and a month old, and she's already trading stocks. What a girl. But anyway, and I was looking at all these companies and I was like, share buyback, share buyback, share buyback, share buyback. And I think the next upswing, the miners are just going to astronomically outperform. I was looking at this and I was like, oh my gosh. I don't know what we'll look at it after this, but I have so many tabs open now. But we'll go look into a tab, see how it's done since but let's get into it. I was looking at all these so look at this. This is like a sector leader. I own it. I mean, full disclosure. Not a buy or sell recommendation, just my opinions, but Anglo Eagle Mines proves a share buyback. So it's authorized to renew its share repurchase program through 2026. So anyway, received the green light from the Toronto Stock Exchange to renew its normal course issuer bid. So, so there it is. They're able to. I'm not going to go in too much because I don't want to get involved in like recommendations or why too much. But Anglo Eagle Mine, they're buying back shares this a couple of days ago. Let's see. Of course, they have to like do some sort of ad. Where is this? Like, I mean, trying to get this thing out. Like, gosh, they're so budgeted. Yeah, stop seeing this ad. Not interested. So yeah, look at this here. Tips ranks. And this I own it. I can't say for sure. But Fortuna Mining, they renewed their share purchase program. This is April 30th, 2025. This isn't a sector leader or anything. Remember, all investment involves risk. None of these are a buy or sell recommendation, but this is just. And then I was going over. This is the one that sold me. I own this one. Oceana Gold buying back its shares. Summaries chat. Quarter 1 2025 repurchased 7 million shares. 2025, the board approved the repurchase of the 100 million common shares. July 2024, announced share buyback program. So you got it right here. Now remember, there's a lot of dumb people out there. Just because they're buying their shares doesn't mean they're correct. And then let's see. This is Pursuit Mining right up here. I don't know much about it. I'm just highlighting this for you, but they're buying back shares. Two, let me see if I can get ads by Google. Gosh, not interested. Of course, they can't. let's see. I'll just so yeah, there it is. Pursues mining updates on ongoing buyback program. So there, you look at just everywhere left and right. So this is why I'm saying this is not a buy and sell. I don't like this company. I don't. But Barrick Gold, they have a new share buyback program. So that's February 12th, 2025. And then I just looked at this. I did this, Chat GPT. More miners buying back their shares. I just Googled that. And it says AI overview. Reports indicate that gold mining companies are increasingly engaging in share buybacks, fueled by rising gold prices and improved financial positions. And then examples. Barrick Gold announced a 1 billion share buyback. Pursues mining. So, and this is the thing. This buyback is very sustainable. And the main reason I say that is I remember the bull market in stocks, and all these companies would borrow money and buy back their shares. And what it is the CEOs wanted to juice up the stock prices, then since they're paid in stock options, retire. But these miners, they're buying back their shares to attract investors. They're trying to attract investor capital. And a lot of people were probably what they did is they, in this mining industry, they issue a lot of shares. And now these people who've been patiently waiting are demanding, returns. And now that now that these miners are now free cash flowing, showing great profitability, these investors are demanding returns. Reduce those so let's see the other one. I just did gold miners buying their shares, and it said examples of gold is, of course, Barrick. We talked about Kinross Gold. According to this, I couldn't find it, but has an ongoing share buyback. Eldorado Gold. They talked about Goldfields and Centura. So I think with these buybacks, I think like I was listening to Jordan Royburn compared with the pool of capital that's waiting on the lines. I think the next upswing, the miners could be outperforming. Now, remember, do your own research, do your own due diligence, consult a professional advisor. Do not invest on this. I could very well be wrong. And I've been wrong before, so just read the disclaimer on the video below. So let's get into, and that's the one thing I wanted to bring up. Gold was down today, so the miners were not. But let's get into the economic data, because this is when I think the Fed will cave. And of course, look at the Fed interest rate decision. The Fed's not cutting rates, and you can tell. Look at it. S&P Global Composite PMI, that's 50.6. Not negative, so it is expanding, but less than expected. ISM, 51.6. That's better than expected. That's good data. I don't care about LMI. The trade balance, now, that was above the consensus, so you can tell we have trade deficits, but they don't seem to matter anymore. But the RCCM, the economic index, that's still in contraction, and that even lost to the forecast, which was supposed to be and then the big one today, I mean, they had used car prices. They showed those going up. But the Fed interest rate decision, which is 4.5%. So now consumer credit was up more than 10.17. That was up more than the consensus and forecast. So that means the consumer is going to keep spending. They're going into debt as the economy deteriorates. Now, the thing is, the more there is a lot of bankruptcies now and a lot of losses, and that's why I think we're sort of, the bull market's basically almost over. Now, if you look at the S&P 500, that's up to 5,600, but still 300 or 400 away. Year to date, it's still down 4.26, so it hasn't had, but it's now up on the year. I remember it was down on the year. And if you look at it, still hasn't come back up near that 6,000 top, but we'll see. So As you can see, though, I think the rallies will be capped because as the rallies, the Fed's not going to cut rates. But going into the actual economy, and this is why I think the rallies are capped, and that's why even the Trump for you rally, that's really gone down. Since then, Starbucks cuts 1,000 jobs and shrinks menu. Now, the reason I think they're shrinking the menu is just a way of cutting costs without actually cutting costs. Saying, "Hey, we're shrinking the menu," to no, they don't. It's a way of cutting costs without eliminating employees. They'll just not buy this bread or eggs for this or bread, bread for this cookie, or we'll stop buying this flavored syrup. And so it's a way of cutting costs without actually. And then here's the other thing is like, I was going to name a couple of things, but even then, look at Weight Watchers files for bankruptcy. Now, this is chapter 11, but you have to remember on the other side, there's people, one person's debt is another person's asset. For example, when I have a credit card bill, and I have credit card debt, that's an asset to the bank or the credit card company because I have to pay that. And they're accumulating interest. So when Tuesday, Weight Watchers filed Chapter 11, eliminated 1.15 billion debt. So transition to telehealth services. So there it is. It's going to be a lot of jobs, a lot of leases. So it's 60 years have struggled recently. They moved into prescription. So yeah, it's becoming a prescription drug company. So anyway, you can tell. I think this is the economy. I think a lot of people would love to have a more natural diet or food or whatnot. I mean, I said more natural. And I think they would. But I think, yeah, what it is people are scrimping by. They're like, all right, well, you know what? I don't have much money. I'm going to have to cut this out. So, and if you look at this here, just to update credit card debt, I was looking at Money Talk News. Credit card debt breaks household again. More people can't afford stuff. And if you actually look at this, it said right here, Fed data shows concerning trends in auto loan delinquencies, while mortgage payments remain stable. Yeah, well, last thing people want to default on is their home. They're going to do everything they can to do that, but they'll lose their car before they lose their home. So that's why I always said the housing bubble would be last. And I thought it was commercial real estate, but it could be the auto loan first, and then the credit card debt. So, for auto loans, all you do is give up your car. You don't really have to. That's collateral. So, this is another thing that just started that I think will sort of creep its way in the data. The restart of student loan collections for millions in default after a long pause. Now that they're collecting and they're garnishing people's ways, people are going to take a pay cut. And this will lead to more defaults, whether it's in rent, auto loans, credit card, or maybe someone has an apartment and now that they defaulted on their student loans and they can't pay rent, their wages are being garnished. They might not default on anything. They might just buy out their lease and then say, all right, I'll move back in with mommy and daddy. And so that will happen. U.S. Department will resume collecting on defaulted student loans. 5 million are in default. And this could swell up to 10 million within a few months. So they can seize tax refunds, paychecks, and Social Security, retirement, and disability benefits. So yeah, someone's getting. So right there, this is, and not only that, this is going to really hurt their credit score. So, and speaking of housing market, they say the payments are, but look at this. Housing market shifts to, I already covered this, favors buying, but they're not buying. And the reason they're not buying is because home prices are too high. They have to come they have to come down. They have to come down. And they're gonna come down. But yeah, America's a poor country. People can't. Not only that, if people are getting their wages garnished, and the other thing is that's someone's customer too. Let's say I have a restaurant, and I have a bunch of people that graduated college recently, or even in their 30s or 40s. Now that their wages are garnished, what's one thing they might do? They might not come for my happy hours, or they might not come for Friday night dinner with me. Might eat at home, and then all of a sudden I lost a customer. So a lot of these things are cumulative effects. So look at this. This is what I said. Tariffs. This is just the excuse to talk about the bad economy. It's not why it's tanking. Tariffs aren't doing anything. And I'm just telling you that right now. So look at that. Inventory rose 1.15 million in March, 19% increase from last year. And here it is, like, you can say whatever you want. This is not because Weight Watchers went bankruptcy, so it's not because people are trying to do alternative healthy lifestyles. Popular vodka and gin brand files for Chapter 11. Remember, the keyword is popular. This isn't a crap brand. So I still remember this. I never really Stoily Group. I've never really had much of their stuff from my And look at this. This isn't the only one. Look at this. Boston Harbor Distillery makes whiskey, gin, rum. They filed for Chapter 11 bankruptcies. So, more whiskey, Westward, House Distillery. They're all filing. Now, I'm wondering when they do Chapter 7. But J.J. Feister, they're getting Sacramento. So we're seeing more and more bankruptcies. And now these are Chapter 11, so it's a restructuring. But the thing is, remember what I said, one person's debt is another person's asset. They're wiping out someone else's asset. And this will show up as losses. Last but not least, I just think this is poetic justice. Alphabet share sinks 7% after Apple Q says AI will replace search engines. Talk about poetic justice. Google spirited AI, which I'm not a fan of. I think we'll be better off without it. If they wanted to ban it, I would not be opposed to it. I don't like what they're doing. I even was interviewed by an AI bot, and so I don't really like it all that much. But yeah, Alphabet's like, I love AI. It's not going to affect me. Yeah, well, look at this. Screw you all. So anyway, that's all. Just if you look at the markets, gold's still going up. I mean, it's come down some, but had a monster day on Tuesday. I was just shock and awe. And I think we're still in a bull market. I think it has one more upswing. It's gone down from 35 to 3,200, like some technical guys say. 2,900 could be the bottom. I wouldn't be really worried until it broke 2,800. But yeah, I think so. Gold, stock market, I think this is a bear market rally. We'll see. It could go up more. I do think the rally is going to be capped with interest rates coming, not being lowered. But anyway, just remember, nothing should be construed as financial investment advice. This mining securities I talked at were just showing you a trend in the mining industry. They were not a buy or sell recommendation to be in those specific stocks. Read more about the disclaimers below, and I'll see you next video.